Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. It's another ep, and I've come to run the deck, double down and plumb the depths. Run the town, pump the sound till I'm out of breath, climbing up the stairs till I'm out of steps. Cause we on top, let the bass kick like a bomb drop, counting up the odd lots, bouncing when the pod drops. See me when I talk shop on Bitcoin infrastructure. Nick Hansen is our guest. He's the CEO of Luxor and Boom and Buster. If we're staying steady, lads, I've been here for years and I'm never going back. 11 on the track, see me levitate with rap. We're in the upside down with the regulated tack, but we play hard, go on, target in our sights. Come out the dark, flow strong, and eat up the light. Yo, it's too important for us to not fight the good fight. Do not go quietly into that good night. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. As I said, CEO of Luxor, Nick Hansen, is our guest. Luxor is a Bitcoin infrastructure company with a mining pool and data, and they do work on ordinals now. It's a great conversation. And of course, we'll also check in with our good friend Beimnet Abebe from Galaxy Trading to talk markets and macro. But before we get into all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Ooh, that might be the fastest one ever. Finn, this beat is, I'm feeling it. I think we're going to have a good podcast, so let's get right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, my friend, great to see you.
Thanks for having me. How you doing?
I'm good. I'm in Texas. I'm in Austin, Texas. You are not in the office either, so this is one of our rare remote meetings, but it's good to see you. I like those glasses.
Thank you. Thank you so much. I'm a little under the weather right now. I'm sure you guys can hear.
So, but we never miss a quick update with Beimnet. And just for our listeners, some of the rest of this episode was previously recorded. That's why you'll see me in the studio with our guest, Nick Hansen, after this segment. But Bim, let's get into it. It's, we're recording. It's Wednesday, April 26th. Couple things to bring up. The one that struck me the most was waking up this morning and seeing Bitcoin basically regaining 30K. It's trading slightly below 29.8. No block clock behind me to show it right now, but it's a significant move up from where we were in the low 27s. What's going on in markets today?
A lot of market volatility has recently been driven by concerns surrounding a regional bank, one in particular, First Republic. They had reported quarterly earnings earlier this week, and it showed that they had lost about $100 billion in deposits. At their peak, I believe, they were a $200 billion deposit institution and I think roughly a $40 billion market cap institution. And now, since the earnings, we've seen their stock pretty much collapse to roughly a 1 billion market cap. And that's all around, the idea that there is really no bailout coming, or headlines about whether or not there is a bailout coming or there isn't. There was a headline out earlier this morning saying that the government doesn't want to intervene in this situation, and so it's basically going to be up to the market to kind of figure out what they're going to do with this institution. And as a reminder to folks, this is an institution that basically has made a ton of has a lot of long duration assets on its balance sheet and a lot of short dated liabilities. And so, just a fundamental, balance sheet mismanagement situation that.
Yeah, this is one of those banks that was teetering ever since Silicon Valley Bank, right? I mean, it's sort of been, they had the injection from the G-SIBs. The big banks just agreed. I'm sure there was some cajoling, but they agreed to deposit $30 billion there to shore up the balance sheet. But it seems like it's been sort of a dead man walking at this point.
Exactly. And so now the market is trying to look ahead as to, what a potential solution looks like for this bank, and what are the kind of implications, more broadly for the rest of the regional banks. And, kind of the main thing, that sticks out in my head is, there's an implicit guarantee right now for the main GSIB banks, right? Like, they are definitely too big to fail. And if you go back to, what Secretary Yellen and other folks were saying right around the time of Silicon Valley and Signature, depositors are generally safe. And so the question is like, how should somebody, with large pools of money, be thinking about, where to park their assets? Are regional banks safe? Are, is there a guarantee above, the 250K number that the FDIC has provided, et cetera? And so, more and more, the conclusion that we've come to here is that, you're kind of setting up a situation where essentially all depositors are guaranteed, and you're going to essentially go move to a marketplace for deposits that's incredibly competitive, and you're going to have a situation where credit is going to meaningfully tighten because one, just think about like First Republic Bank. They are going to have to offload $100 billion worth of long duration assets into the marketplace. And so some bank or some institution has to buy those assets. And so like when you have assets that are going to maybe trade at a discount, et cetera, like what's your real incentive to go extend credit when there's all these like distressed sales of banks and bank assets, et cetera, and you're just going to be losing reserves over time as TGA balances pick up, as QT, sort of, moves forward, 100 billion per month, et cetera. You're going to be losing deposits over time as well. So there's really a very dynamic set of circumstances that are at play here with the banking system. And the market yesterday got very worried about sort of a left tail scenario where you have, banking stresses combined with, souring economic data combined with a Fed that is most likely going to hike in on May 3rd, right? And basically a week from now. And so, what you had happen was a huge rally in front end duration. And you actually saw, May meeting, pricing move down a lot, but you had, certain parts of the US front end curve moving by 30 basis points. You had gold breaking through 2K, as folks, sort of got concerned. And so, there's a flight to quality, and that kind of helped Bitcoin a little bit because it was able to recapture the story that had driven so much of the performance this year, which is a failing banking system. Right, the move from 20K to 28K in Bitcoin was largely off the back of Silicon Valley Bank's failure, and the sort of apparentness of the need for Bitcoin in moments like those. And so you had a little bit of that narrative come back into the market when you were in technically oversold conditions. I would say there was a large Binance TWAP seller, last week that had kind of artificially, depressed prices. You were at support around 27K in Bitcoin. And the move higher happened in a low liquidity window, which is sort of U.S. afternoon session, and so you had liquidations, a little bit of a short gamma squeeze. You had actual buyers come in because of a change in the narrative, and all of a sudden Bitcoin goes from 27,300 to 30,000 in the span of 12 hours, and so it's a pretty dramatic move. I didn't anticipate a move of this magnitude. I did think that another bank potentially failing or rumors around another potential failure was going to help Bitcoin, but the magnitude of this move has definitely caught me a little bit off guard. It's just so quick.
Yeah, I was taken aback a little bit too when like I said, I woke up this morning too, and it really had started to pump all the way to 30K. But look, I guess the corn and is going to do what it's going to do. The only other thing I'd mention is, pretty impressive to see Bitcoin still leading this rally, which is what it did, particularly post Shanghai. It kind of felt like March was the banking narrative, and then April came Shanghai for ETH, and you'd think ETH would then be in the driver's seat. But I guess maybe like you're saying, the banking narrative here is playing a factor still. People are still, Argentina central bank appeared to have plundered retail bank accounts in order to get dollars. I feel like that was almost a little bit of a Cyprus moment, a bail-in moment that also felt like a Bitcoin kind of buoyant narrative. But things are looking pretty strong.
No, absolutely. I mean, the stories and the cases for Bitcoin are all around us. And I think, folks in the West, it's become more apparent recently because you had, historically like stable institutions failing. So it became, more apparent. But for somebody in EM, like Bitcoin's a story that plays every day, right? Hyperinflation is an issue that is present every day. capital controls and people's dollar bank accounts, not having access to them, or awful exchange rates. That's a story that plays every day in EM. And so I think, getting the focus of the U.S. is super important, to driving it, but it's not necessary. And a lot
Hmm.
of what you saw earlier this year was a Bitcoin rally that was driven by largely non-U.S. folks. If you just looked at the sort of performance of Bitcoin in certain regions, and so I try to take a step back and try to think critically about kind of what are the global forces shaping Bitcoin, and there are just so many each and every day. So that's why I'm still constructive on it. It's technically speaking, it is respecting trends like unbelievably well. Like Bitcoin had 10% drawdown and it got bought, and now you're back at 30K, and it's been setting higher highs and higher lows. It's an asset that is clearly trending. The dollar de-dollarization story is not going away anytime soon. I mean, there are headlines literally every day about BRICS and new nations trying to join, Russia, China, trade developments, gold, gaining more prominence. There are these constructive developments literally every day. And so, I think that's why you're seeing this asset, trend really well. And the last thing I'll leave you guys with, I think the story of adoption really, in terms of when it kicks into the next gear, is once you get like major institutional adoption again, or at least once you start to see more money flowing in. And today, the CME CEO was on CNBC talking about Bitcoin CME volumes and ETH volumes, etc. And the one thing he noted and wanted to stress about his crypto products was that the large versions of his crypto products are the ones that are doing the best in terms of the ones that are picking up the most traction, right? And so he's saying there's a bifurcation between retail and institutional, and he's seeing institutional grow more and more. And when he went out to London recently, he said the amount of activity and the buzz around it was super compelling, and he sees it as a product he's going to perpetually essentially be offering. And so I think there's just all sorts of constructive stories at play. It's an asset that's trending higher.
Beimnet Abebe from Galaxy Trading, as always, my friend. Thank you so much. Let's go now to our guest, Nick Hansen, CEO, founder of Luxor Technology Corporation. Luxor, Nick, great to have you here.
Yeah, awesome to be here. First time checking out the new office. Very, very nice. The recording studio is incredibly high quality. So this is probably going to be the best my voice has ever sound on a podcast. So.
Yeah, it will. We have great production. Shout out to Phineas and Badir for this help. Really happy to have you, Nick. So I guess I'll say it, but then you correct me. Luxor, among the many things you do, you run a Bitcoin mining pool.
Yeah, so if you Google Luxor, the thing that you'll find is Luxor Mining Pool. Like that's the thing we're known for, specifically Bitcoin mining. We're the second largest North American pool, first North American pool, second to Foundry, of course. And but we do a lot of other things. We have financial products for miners. So we produce something called the Luxor Hash Price NDF, which is a cash settled NDF, and then we have other derivatives products as well, mostly for miners to like hedge or for other folks to get leverage, financing products, that sort of thing. We also produce a firmware, which is the software that goes on a device. You can almost think of that as like when we used to jailbreak our iPhone. Like the iPhone is a phenomenal platform, but there's still a few features that are locked. We build a firmware that allows you to do that on the mining machine. And then we also do a bunch of machine brokerage through a platform we call Luxor RFQ, so that the ability to go post your buys and sells. It's kind of like eBay for mining machines, but the reason you can't use eBay or Amazon or anything like that is like it's just such a bespoke process. It requires a ton of logistics, a lot of hand holding, that sort of thing. So those are the things that we're known for. And then, of course, most recently we acquired Ordinal Hub, with the craze in ordinals. I was self-proclaimed. I missed the NFT boat the very first time around. And mostly because it was on chains that I wasn't really interested in. I'm a Bitcoin maxi at heart. Maybe not the toxic maxi culture that exists today, but I'm definitely a financial Bitcoin maximalist, and really believe that pretty much anything that needs to be done of value should be done on Bitcoin. And now that we have that on Bitcoin with ordinals and inscriptions, we went all in on that and decided we went out and bought Ordinal Hub, which came with Jameson Nunny, as the head of ordinals for Luxor, and now we're pushing that envelope in many different facets. So those are the big things that we've got going
Fascinating.
on.
So plenty of topics we can talk about. Let's go right to ordinals for now, and then we'll get into some Bitcoin mining and Bitcoin related stuff. But so one thing that I know you're well known for in ordinal world and in Bitcoin, you guys were the ones that helped those folks rip the 4 mega, as they say, the 4 megabyte block. Luxor mined, or mining pool, I don't know, what did we say? Delivered the largest block in Bitcoin history.
Yeah,
what was that about? And it was the picture of Taproot Wizards, like, come join us. Magic internet money.
Yep, it was the the reason ordinals and mining really are very cohesive is because ordinals drive fee volume. Fee volume drives miner profits. So all of the customers that use Luxor are benefiting from the work that is being done to promote more ordinals and inscriptions, because mempool is fuller, there's more transaction fee volume, which increases revenues. When Udi and Eric and the rest of the Taproot Wizards Council approached us to rip a 4 mega.
That's what they say.
Yeah, rip a 4 mega. The reason you need a mining pool for that is because the Bitcoin core node, if anybody, probably your guests are running your listeners are running a Bitcoin node at home. If somebody tries to relay a transaction that's more than 400 kilobytes, your node will reject it. It's called the mempool policy. There's a bunch of different policies, like there's a certain fee threshold. They won't accept transaction with 0 fee and all sorts of different things. So we decided to build a Bitcoin core node that got rid of all those policies. One of the, of course, the Taproot Wizard was infamously a 0 fee transaction as well. But more importantly, we removed the 400 kilobyte limit and allowed it to be up to the 4 mega size. So we could then inject it into the mempool that was mining all of our that was mining our transactions,
our own mempool,
your
pool's mempool, yeah.
And then, of course, it wouldn't broadcast to anyone else because they wouldn't accept such a large transaction. So it was sitting in our mempool. Our miners were receiving those transactions via the job, the Bitcoin jobs that they were working on, and then ultimately somebody submitted the winning solution, and then it got broadcast, and that was really that was one of the big inflection points in the initial run of ordinals, was this idea of like a 4 mega, and then we have had a backlog of folks trying to get their own 4 mega done, which has been really interesting because it does. I don't want to say it's not MEV on Bitcoin the same way that there's MEV on ETH or other chains, because it's not like, there's not like on-chain mechanics like that, but it is some extra value that we're able to extract via just being well connected and going out and putting in legwork for
it is kind of MEV in a way, which is highly on ETH, highly dependent on transaction ordering, right? Because transactions on Ethereum execute chronologically in the EVM, so where your transaction is inside a block is very important, and that's how sandwich attacks and front running and back running can be done. On Bitcoin, transactions execute atomically, so there is no, if it's in a block, they all happen at once. There's no like order, but you are using your ability to do transaction selection basically as the pool to provide additional services.
Exactly. Now
that is funny though. The 4 megabyte block. And really like what, a 3.96 megabyte picture or whatever it was. Right. That caught a lot of attention. I think that really drew a lot of eyes to ordinals in general. It was like a flag planting saying like we can do. And then of course the picture itself is a Taproot Wizards picture.
It is it was a picture of like the Taproot Wizard, and so of course that's really like the flagship for their project, and that seems to be what other projects are interested in. They want to use that as like the billboard, say, their on-chain billboard for their project, and that seems to be what we're seeing here.
Are you seeing other mining pools starting to get interested in these types of ordinal focused services?
Nothing as specific as what we're doing right now. I'm sure that they're talking about it because there's there's certainly alpha to be had there, and I can't imagine, or I can't imagine that we're going to be the only ones seeing that there's this opportunity to go out and generate extra reward for our miners via these. But we call them bespoke blocks, but we can call it ripping 4 megas, but we call it bespoke blocks. But it does seem like that is something that most other pools will probably start getting into, just because there is alpha to be had there.
And not even just the 4 megas, but just like selling out of band block space to ordinal creators.
Yeah, I mean, another one that was really famous was sequential mint that we did for DGods. So if anybody here has done any inscribing, you know that you're basically at the mercy of the mempool. You don't know what order your inscriptions are going to go in, how many blocks it's going to take, etc. It's basically just like spray and pray.
Yeah.
What we did for DGods was we handcrafted a block that had all of their inscriptions in a particular order,
Which they wanted.
Yeah. So it's super aesthetic. Like the idea was in the like when you would go to the Explorer, you would just see all of their inscriptions in order, exactly correct, the way that they asked for them to be put in.
No other random ones mixed in.
Yeah.
I see.
And so if you go take a look at the Explorer around the time that the DGods were being minted, you'll see that they're all there, 535 of them.
In a row.
Yeah.
Wow.
It was around 770,000-ish was when they got theirs in.
Yeah.
And yeah, that was really cool. That was another really kind of bespoke thing that we've done. There's been a ton of different requests for different things. I don't want to dish people's alpha yet, but there's like the amount of creativity that people have, it's incredible.
It's really interesting because if you think about it, it could be a lot bigger than just this, but with the block explorers, right, the ordinals.com or whatever, the ORD, you really have like a billboard now, a giant graffiti wall. I don't want to call it, I'm not necessarily insinuating that it is graffiti, but you have a giant space for example, for advertising. I've scrolled around there and just seen advertisements. Yeah. Literally, people saying like, come trade Bitcoin on this website or whatever. And so then that adds such an interesting, the ordering you're talking about, these bespoke mints, like.
Now, you want to talk about ordering.
Yeah, tell me.
There is zooming out just a little bit, this idea of ordinals and inscriptions, Casey has famously called it a shared hallucination because we're all just kind of viewing data that's on the blockchain. We just happen to know how to interpret that data.
We've agreed on a way to interpret it. If say the ORD project was wiped out today and nobody was able to like decode how to get those inscriptions and ordinals out of the chain, those would all just like go away and they would just be like big transactions and nobody really know how they worked. There is a protocol being implemented called BRC20, which is trying to be like the ERC20 of ETH on Bitcoin using ordinals. Yeah, I'm not saying it's a good idea, but what I'm saying is that now you do have ordering, which is important now because it is based on when those were inscribed. Yeah. If you were, say I don't even know what BRC20 tokens are out there right now. I imagine Pepe is one. So we'll just say Pepe. We got a Pepe behind me. We got a Pepe behind me. I give you 20 bazillion Pepes. And you want to sell them, we need them. That ordering needs to occur correctly within a block. So now there is ordering within transactions within a Bitcoin block, right? Which opens up real MEV if this catches on. This has been one of the main reasons why the Bitcoin community historically and the Bitcoin development community has opposed adding pure tokens to Bitcoin is because it can pervert mining incentives. It can create opportunities for MEV. Yeah, and I mean we're well aware that that's possible. That's what's happened on basically every other chain. Right. And I guess the question is like, first of all, do you know if it's BRC20 like any good from a technical? It's just ordinals, right? It's
it's just ordinals.
So you're putting some token data instead of a picture.
Yeah, exactly. The protocol is super bloated because it's like JSON and text based. It doesn't need to be JSON or text based. But and I don't know the soundness of the protocol or anything. I'm just saying that there is something out there that exists.
Ordering will happen.
There's a hallucination of hallucinations occurring. It's hallucination inception and. Yeah, exactly. But there's other stuff that's occurring on there too. So it's been incredibly interesting to see.
Yeah, I saw people are doing like an ENS type like domain things. Was it .sats or something?
There's .sat, .unisat,
There's a bunch
.btc.
Of them. Yeah.
There's just regular names, like because they were saying we don't need to have the .btc. So that's when if you go see a bunch of inscriptions that are all just text, it's usually something related to
something like that. Do you think so? You said this in the beginning about inscriptions and ordinals, but like, how would you view how this is impacting and will impact Bitcoin culture and development in general?
Yeah, so there was some initial. I mean, certainly in the very beginning, back when we did the big wizard, it was around 600 or so. Inscription number 600. Just for reference, it's what today is the 13th, and
What are
we're
we at?
about 1.1 million
Wow.
inscriptions, and this is what, maybe we'll say 3 months.
3
Yeah,
months,
3 months. So we have had explosive growth, but in the very beginning, there was a very vocal group that was very against inscriptions.
Yep.
The initial critique was that this would cause chain bloat, unnecessary chain bloat, and basically they were saying that you put your JPEGs on other chains, you don't need to put JPEGs into into Bitcoin blocks at all. That is that's misuse of the Bitcoin block space. And the very first time I ever met you in person it was like 2 a.m. in Miami, and it was around the time that Marathon Digital was filtering transactions because of they were worried about like OFAC sanctions, right?
Yep.
They were doing what was called OFAC filtering. And at that time then, and still today, I've always been a proponent of, if the protocol allows it, it's a valid transaction. Whether I agree with what's in that transaction or not, doesn't matter, because in this case, code is law. So it does seem like that critique has somewhat died down. And overall, now it's moving towards the critique that most Bitcoiners have against altcoins and other chains, is that, this is basically just like the shitcoin du jour.
Yeah.
So
yeah.
That would be, and
They're just not desirable transactions, so we don't like them.
Yeah. Well, but now they're moving on. The critique has moved on from like, okay, well, maybe this is like good for miners and all of that stuff. And so maybe the economics of this are and the desirability of these transactions, is kind of a moot point now. But really what we're seeing now is probably, and there's already have been a lot of like ordinal scams, a lot of the stuff that comes along with shitcoinery, the stuff that the stuff that you see, rug pulls and,
that can happen
just ghosting.
now.
Yeah, just ghosting protocol. Exactly. So all of that stuff can happen, and it probably already has happened in ordinal land.
Yep. But the tent seems to be getting bigger, and it seems like there's a culture clash.
There
right?
certainly is.
Yeah, the monetary maximalists who want Bitcoin to primarily be non-sovereign, decentralized, bank, central bank, right? A global
sound money. Yeah.
Sound money. They think this is misused the same way they didn't like Satoshi Dice, 8 years ago or whenever that was.
Right.
They didn't like op return because this was taking up important block space that should be reserved for whether it's payments or digital gold type activities.
Right.
That's still a huge part of the Bitcoin culture.
Right.
But now you have a giant and growing other part of this culture that is, focused on art, on even on tokens, to your point.
Art and culture and tokens and all of the stuff that has generally eschewed Bitcoin is now coming this way. And the point, one of the thoughts that I've had, and I've been kind of saying this behind the scenes, is like, the whole of Bitcoin now is, let's just say that 100% of the Bitcoin culture now could stay within Bitcoin and still become a very small minority as new entrants come in. So, say there's 100,000 Bitcoiners in the world, or 1 million, whatever it happens to be. We add all of these other people, we go up to 10 million.
Yeah.
That million still exists, but they're now a very small minority.
Possible.
And we're gonna have to rectify or rationalize that.
And reckon with it.
Reckon, that's a much better word. Yeah.
Yeah. I mean, I don't know where it goes. I think it's very interesting and exciting. Another idea I had was that we wrote about, and when we wrote about inscriptions, was that if I feel like really nobody knew this was possible. If you go back and read from the core devs, they did know that they had lifted the TapScript witness size limit.
Right.
They knew that.
They did it on purpose, and I can talk about why.
Well, why? Why did they do that?
They did it to compress the UTXO set. Basically, it incentivizes wallets to use up UTXOs, which adds compressionary pressure to the UTXO set. There's maybe, I don't know, the last time I checked.
Put more data in the witness, basically.
Yes, exactly.
Which is prunable.
Exactly.
And not part of the UTXO
set.
And
so, and then it's also cheaper to craft those transactions because they get the
SegWit discount.
The SegWit discount.
Yeah.
So that's the reason it was introduced.
But they were thinking I think they were thinking complex, like Musig and like all the stuff that Taproot and TapScript enables from like a complex, transaction encumbrances, multi-sig stuff. No one, and I went back and looked, and of course I was there. You were there during the debate around Taproot, which, by the way, not only was this not raised as a possibility, but we also activated Taproot with speedy trial, so it was even faster than theoretically it would otherwise be. And I'm pretty sure if the Bitcoin community of 2021 was told that if we enable Taproot as written, you're going to get a giant explosion of 1 million NFTs minted on Bitcoin in 3 months. They would have rejected Taproot.
Yeah.
So that's one of the most interesting things to me. Now, I don't think a lot of people realized, I mean, Casey really saw the witness and what could be done with data in the witness, and then came up with the ordinal theory part of it and mixed these two together. But it seems like nobody really realized this could happen. And so, right? I mean, it kind of came out of nowhere.
Yeah, so he has been an ordinal theorist for a long time. Long predates this inscriptions and all of that
stuff.
stuff.
So you should have been able, if you followed Casey's work, to realize there might have been something here.
Well, so let's just for everybody, in case I don't know if this has been covered yet, but an ordinal is really the ordinal theory states that you can individually identify all 2.1 quadrillion satoshis that exist via a numbering scheme. Again, it basically just has to do with like the very first block, and it has Satoshi number 1, and the very last block will have Satoshi number 2.1 quadrillion, and then all of them in between can have some number associated with them. You can introduce like some rarity, like the first Satoshi in a block is considered uncommon. The first Satoshi of the block that starts at difficulty epoch is considered rare. There's epic, mythic.
Right, like the first sat of the first halving block or something.
Yeah, those are considered epics, and then there's a whole like numbering scheme.
And to be honest, we could make up our own things that we like.
Exactly.
We like the one because this was in the transaction that Michael Saylor bought Bitcoin with or something.
Yep.
Right?
You could also, there's a group out there going out and trying to find 2009 sats to inscribe on. So basically finding sats that are from, very, very, very early in Bitcoin history. So that theory, though, has been around for a long time. Like the idea that you can individually number Satoshis, and those Satoshis he calls ordinals. The key unlock was the idea that you can inscribe extra data and attach an ordinal to it, and then now that inscription is tradable.
Yeah.
So I can move it around now
by moving around that specific
that sat around, which is what makes it, which is really the key unlock, and that was the thing that that kind of caused what is occurring now back in what would be end of February.
Because I think just putting even without the ordinals, putting data on the chain is cool. Like that's interesting to me. I thought it was interesting with op return. I meant to do it, but then I screwed up and there was a lot going on. But I intended to op return my first son's birth.
Okay.
But then, we were in the hospital and I was like, I'm on phone. And I was like, I can't figure out how to do an op return transaction from my phone right now. And also my wife's like, I need what are you doing on your phone?
Put your phone away, please.
Put your phone away.
It's kind of important.
I've liked that idea. And of course, Satoshi, I think it can be said inscribed right in the Genesis block, right? Yeah. So, and there's tons of other ones. There was, for what's his face, the developer
Lex Sassman.
Yes, Sassman. Yeah, somebody inscribed a tribute to him when he passed away. There's plenty of stuff like that.
Yep.
And it goes back to the first block in Bitcoin. I mean, Satoshi, obviously, chancellor on the brink of second bailout for banks. So I love that alone. And then but you add the ordinals, and now you've got an NFT essentially, or a token. You've got a token with data. And that is what we're seeing now.
So you mentioned one thing I wanted to get to before we move too far away from the topic was about how the culture has shifted.
Yes.
And I think that if I were a betting person right now, I think unless there's this huge influx of new blood into the ecosystem, that we're like Bitcoin Core, I think is ossified. I don't think that a new fork will get enough traction for a generation, most likely due and very specifically due to what's occurring right now.
Partly from this. We said this too in our report. We said it was bearish for future BIPs.
Yes.
Because this wasn't seen. I think now we said, look, you could have some, but they'll be much more narrow than Taproot and Schnorr were, which was a pretty gargantuan upgrade, right?
Mm-hmm.
But maybe you'll get some narrow ones that just do a little thing here and there. But like the outcome here being so unexpected to the majority of the community, I think people are going to be very, very skeptical.
Yeah. Shout out Jeremy Rubin. I unfortunately think that his BIP has been pushed out even further now. Yeah.
And I do like vaulted custody and other types of encumbrances like that and covenants, whether that's CTV or Op Vault, right? Is that James O'B's proposal? There's some good ones that are interesting. I think they add a lot of powerful features to Bitcoin encumbrances, which is important for things like you want to build a certain type of layer 2 on Bitcoin, you would need something like that. But yeah, I mean, people find them interesting. I think it's going to take a lot of work to get the community, on board with that.
Yeah, and that that community might become the minority, and we'll see. As you know, if this thing, if in a year from now we have 50 million inscriptions, there's 50 million new people. Well, maybe not exactly 50, but there's a lot that encompasses a very large group.
Yeah. Okay, we could keep talking about inscriptions and ordinals a lot. I think we'll both be in Miami for Bitcoin and some ordinal stuff.
We will.
So there'll be more on this. But I do want to get into it a little bit on Luxor and mining and Bitcoin in general. I mean, so what are you guys have great stuff. You have I love the hash price. You have a great dashboard with information. So a bunch of good data from Luxor too. What's the most interesting thing about running a mining pool in your mind? Like what is it like being a mining pool operator? I mean, your customers are miners, right? I mean, they call you,
our customers,
you have customer service.
Our customers are miners. We have customer service. We have Telegram, Discord, email, a lot of things like that. So the point you mentioned, so you said the dashboards, like when you're talking about that, that's actually a property we have called hashrateindex.com.
Yes.
And we try to track all of the metrics related to mining. If you go there now, you can see that that transaction fees as a % of block reward are certainly up, especially because mostly attributable to inscriptions.
Right.
Something we haven't really talked about, or anybody has really talked about yet, is now that there are all of these inscriptions, all the marketplaces are coming, and that's like going to drive a lot of transaction volume as well. Aside from actually putting the data onto the chain, if we're out trading and doing all of this, NFT activity that you see on other chains, that's also going to set another really strong floor for mining for fees.
Yeah, and revenue.
And those types of transactions are actually going to be much more beneficial to miners than the actual inscriptions because they won't be getting the discount.
Right.
And there's an incentive to pay up. Where with inscriptions, you're like, I don't really care if it
just
goes
needs to get out eventually, even within a day. But yes, if I'm doing trading or any kind of like financial activity.
Yeah. If I'm selling you a 12-fold, I want that confirmed like the next.
Yeah, I want to know that I got it right away.
So I'll pay $100 to get that done. Where now people are like, I don't really.
And that's what we see on Ethereum, particularly around minting days too, but also in general. I mean, high value transactions people pay up for, or what we call high time preference.
Exactly.
But okay, as a pool though, I agree. I like. What is so explain to me how you can what do they call it? The way you do payouts, right? There's two main ways that payouts occur, right?
Yep.
But one very popular one.
There's two. Yeah, the PPS, pay per share.
Thank you.
Basically, we can ascribe every time a miner submits a bit of data, they submit a share every 3 to 5 seconds. We can ascribe some value to that share based on the current economics, basically what transaction fees are and what the network difficulty is. You can say, I know this block or this share has X% of a chance of solving the block. We can give you that much value for it. It's mathematically equivalent to guessing lottery numbers, and that if I'm buying lottery tickets, I know how much one has how much
each likelihood
the likelihood is, and then I can ascribe a value to each of those tickets. Famously, the lotteries have been getting much larger, partially probably due to inflation, but the value of each of those tickets is actually greater than the value that you purchased it for, if you don't take out taxes and things like that, because the value of the reward is so high. But anyway, you can. So that's pay per share. You're basically paying for a hash rate upfront, regardless of whether you find blocks or not.
Got it. Yep.
Then there's a less common but more historically utilized method called PPLNS. Also, there's some places do prop, but PPLNS stands for pay per last N shares. And basically what that means is that over the last, say 7 days worth of shares, I grab up a bag of them, and if I submitted 10% of those shares and we hit a block, I get 10%. Say you had the other 90, you would get 90% minus, of course, the pool
So it's sort
fee.
of like rather than paying up front based on the likelihood, it's like we just literally look and say like, what money did we make, and then you get a proportional.
Yep, exactly.
As a miner.
Mm-hmm.
Yeah.
And so then in that way, we say that miners are then bearing the luck risk. Basically, mining is a probabilistic game where some days you mine a lot of blocks, some days you don't mine a lot of blocks, and in PPS, the mining pool handles that. Basically, they shield the miners from that.
Smoothed out.
It's all smoothed out entirely. Yep. Obviously, that does come with counterparty risk. You have to trust your pools, managing their bankroll and all of that stuff effectively. But in the long term, it should work out. The converse is true as well with PPLNS. So if you're PPLNS, you don't find a block for a while. People are like, oh, is the pool broken? What's going on here? Like if Brains doesn't find a block for a couple days, their support chats are going wild with people thinking the pool's broken or something like that. It just happens to be an unlucky streak. And then of course when they hit 5 blocks in a day, nobody's like, oh, is the pool broken? We find too many blocks. But yeah, so those are the two payment mechanisms. PPS is certainly the largest. I would say it's probably 90-ish% of all hash rate. Probably 10% of hash rate, maybe a little more is solo mine. You've got Marathon kind of solo mining now, and a couple of other pools that are doing their own mining.
You'd have to. I mean, I guess if you're really big, you could. Solo mine.
It does start to make sense. Yeah, it does start to make sense, especially because of the fee that you would be charged. It starts to add up pretty quickly, as well as there's a lot of data that you produce, and it would be nice to really own all of that data.
Maybe not leak it to the pool or whatever.
Yeah. I mean, there are some of the big miners when they're mining at Foundry or even Luxor, they try to mask information about the miners. They don't want to say S19 XP on particular rack.
Right.
They try to code name them and things like that so that you don't the pool doesn't have any information about what's underneath there. But so yeah, that's and then most they don't really try to mask IPs or anything like that, but they do certainly sometimes try to make it a little ambiguous what they're doing, just because the more data you leak to the world, the more attack vectors you have.
Yeah,
and things like that.
and it's a highly competitive industry, right? It's like almost purely competitive.
Yep.
It's just work. It's proof of computation.
Yep.
And that's very competitive. So I get that. What do you think about the future of Bitcoin mining pools? And we could fold in the Stratum V2 question, which that time in Miami we were arguing about. One, do you think we'll get Stratum V2? Is there something else that's coming? Is there something like from a technological standpoint in sort of the mining market structure? Like what's going to look like in the future? Is it any different in your mind?
So right now, I think that pool, obviously, so we're maybe less than a week away from Foundry announcing that they are turning on fees for the first time. Their fee tiers are out there now, and there's a timeline, which is end of the month. So
they have been there've been no fees at all, and that's contributed largely a big contributing factor to their growth,
to their success. Yeah. So that has been and they have they were getting close to 35-40% of the network, which started to cause people to have some uncertainty about is that bad.
And it is bad, by the way.
Yeah.
There was a previous time when a Bitcoin mining pool got up to like 50 or 55% years ago, and
CEX, right?
Yeah,
CEX.io?
and like the miners pulled together and said we're gonna move and diversify because we don't want it to be that centralized.
So what they did, that was Ghash and CEX Sex.io, and they I think they split, and then they still had more than 50%. But
but at least it was technically separate.
Yeah.
So they're adding the fee schedule.
So they're adding the fee, which phone's pretty much been ringing off the hook ever since then. I'm sure other pools are doing the same things happening there. Miners are very, very monetarily motivated, meaning if you have zero fee, like that's the only competitive advantage you need. You don't need to add features. Doesn't matter. Like miners. Very, very few, almost no miner we've ever had is, the few miners, the miners that we do have joined because of the features that we have. But ultimately, at the end of the day, having 0% fee is one of the biggest things that you can do for your miners. But we just can't run we don't have a Genesis. We don't have
right. So Foundry is
GTC.
A subsidiary of Digital Currency Group, so they had other. Other things they were doing in order to earn money, et cetera. Yeah.
Right.
But
exactly.
you guys are a Bitcoin mining pool company and other stuff now. But yeah.
And so that's
that was your revenue.
Yeah, exactly. And so you were kind of getting to the point of like, what do you think about running a mining pool? It's a terrible business. It's a very difficult business. You have to have effectively 100% uptime. It's very hard to have a business where the expectations are so high and the propensity to pay is so low.
Yeah, and so much money is at stake, right? I mean, one block is a lot of money.
What, 200K maybe?
Yeah.
Seven-ish, let's say 7-ish Bitcoin, 6.5, 7 Bitcoin today.
Yeah.
That's what, between $180,000 to $210,000.
Yeah.
So yeah, if you mess that up, that becomes very expensive very quickly. Actually, F2 Pool has recently rejected a few blocks.
I saw this. They had submitted, I guess, invalid blocks.
2 of them, yeah.
2 of them.
Yeah, 2 of them.
That's
and
a huge error.
Yeah. So what happened was they have they construct. Most certainly they're not constructing blocks with Bitcoin Core, which we are. Most pools do, but they're constructing their own blocks, and there's a SIGOP limit. And I think it's 80,000 SIGOPs that you can include in a block. There was another protocol somewhat similar to ordinals called Stamps that was doing, which required a lot of SIGOPs. And I think they just didn't have that check in their code because who the hell is going to put 80,000 SIGOPs in a block?
Some new protocol that they weren't fully aware of. Yeah.
Yeah. And so they ended up rejecting 2. They submitted 2 invalid blocks.
I mean, that's losing almost $500,000.
Close. Yeah.
Yeah. That's crazy.
Yeah.
So Stratum, let's talk about Stratum V2 a little bit. So Stratum is the protocol, the technology protocol, messaging protocol that miners use to communicate with pools.
Right.
Primarily.
And I would say probably 98% of hash rate uses, 99% of hash rate uses Stratum. We call it Stratum V1.
Yeah.
It's a JSON-based, it's a text-based protocol, which is not optimal.
Right. It's old.
Old. I mean, it was, being old is fine.
I know,
TCP
but it was
is old,
designed for a wholly different mining era.
Yeah, exactly. So
at this level of hash rate and scale, if we started from scratch, we would probably design it differently.
Yeah, we would use what we call a binary protocol. Like you can compress this protocol like 80%.
And that would make it more efficient.
Yeah, it would just make it more efficient. You wouldn't have your switch gear would not be under as much stress. You wouldn't have as much ingress or egress. So like miners that mine, maybe they're not connected to like fiber optic. They're connected via like a 5G connection or a 4G connection.
Right, like if they're off the grid somewhere.
Off grid and North Dakota or
so
even someplace in West Texas.
Meaningful reduction in the amount of data that you have to send back and forth would help.
Yeah, so it's certainly. I know you're kind of pushing me over into this direction where I've been a little bit. I
wouldn't say you're critical.
I'm not critical of V2.
I just think it's as good as people say.
It's not going to solve the problems that people think that it will, but it will solve a lot of problems, and I think it's a meaningful and important upgrade. So I want to be on the record as saying that I think Stratum V2.
I am baiting Nick a little bit because when we first talked in Miami, this is what we were arguing about.
Right. I do think that Stratum V2 is a meaningful and important upgrade for the network, and I do support it, and I want people to start. Yeah. I want it to happen.
But what are the things that people have said that it will do that? What have they said? How has it been billed? Versus what is the reality in your mind?
It has. So let's talk about some of the features that Stratum V2 has.
Yeah.
It has connection multiplexing, which basically means that you can do multiple. You can serve multiple miners over a single connection. It also has binary support. It has reconnect. It has fast failover. It has all of these awesome features that are really good, like things for mining to happen. But the only thing people actually care about when it comes to Stratum V2 is what we call job negotiation or transaction selection, which means that the miner on their side are the ones that get to select which transactions go into the blocks. But that's not exactly what happens. The pool sends you a job template and says, these are the transactions that you're working on. And if for whatever reason, the transaction that the miner isn't, if there's a specific transaction that a miner wants included in the block,
they could put it in.
They could propose to the pool that they add this. And then the pool will say, "Yep, okay, here's a new template. You can start working on this one that includes all the transactions that you want."
But the pool still is sending it back to them to work on.
Ultimately. There's a negotiation process between the miner and the pool, and so the thought here is like, okay, so if and the reason sovereign Bitcoin maximalists want this to occur is because it takes power away from the pool, which is great. I want all of the power to be taken away from our pool. We don't want to have we basically just want to be a facilitator.
Well, there's liability, right? I mean, because the block proposer, if we use like Ethereum language or whatever, the pool is selecting the transactions that go into the block. And this goes to the point you made about Marathon Digital and how then, they said, well, crap, maybe we don't want some of these transactions in our blocks, right? So they started censoring some transactions. Well, not censoring, just not putting those ones in their blocks. I don't know if that counts as censorship specifically, but that's the idea, is that there's an attack vector on Bitcoiners, Bitcoin transactors, which is you go to the pool, let's say you're a government or whatever, and you say, we don't like Alex, it's illegal for you to include any of Alex's transactions in the block. And I think Bitcoiners, they fast forward in their minds and they say, it's not too difficult to think of a world where there's widespread censorship enforced on Bitcoin through the mining pool, right? So the idea is like, well, if we can move that block proposal part of the life cycle out to the spokes, which is the individual miners, then that would be much more resilient and resistant to that type of censorship. Yeah, that's the idea. That's how it's pitched.
Exactly, and the idea is great. but the pool's still going to reject that transaction, and
If
so
they're
then,
told to.
if they're told to by their government. So I think that pools still will have to operate within some regulatory environment, whether that's the U.S. or Russia or China or wherever they happen to be. That their pool still needs to exist, and they'll ultimately just reject that during that negotiation process.
They'll just
end
keep
up
saying no
rejecting.
to adding that transaction.
They'll say no, yeah. So if you want to, and then the proposal then from the V2 team that's been working on this job negotiation protocol is that the miner can fall back to a backup pool, and I think that's a great idea.
So that's just literally to a different pool.
That's just to a different pool, yeah.
Yeah,
So I think
and
that's ultimately
so diversity of pools in different jurisdictions is probably a better hedge against that type of censorship than purely SV2 transaction selection.
Yeah, exactly. And really, I guess transaction selection, though, does give you more of an overt indication that a pool's censoring the transaction. That might be maybe a benefit, because up to now, if a pool doesn't include a transaction, like maybe they weren't connected to the peer, or
it's not obvious why.
Yeah, the mempool is very ephemeral. The mempool is not the mempool. You have your mempool and you have your mempool,
right?
And we all have shared. We have a lot of shared transactions, but they're never exactly the same because of the latency in the network. The one in China was different than the one in Russia. Is different than mine. So if a transaction isn't included, you can't say, obviously,
this is why.
Obviously, it was being censored. But in the case of V2, then a miner would be basically notified like that transaction is invalid and we won't. It
was rejected.
Yep.
Yeah.
Mm-hmm.
So that's interesting, and it is interesting. It's improvement, but it doesn't give you that self-sovereign resistance that it's often pitched as having. So.
If you want that, you need to introduce like shielded pools or shielded transactions, kind of like Zcash.
Some privacy, or even a decentralized mining pool. I think there's been some proposals for
P2
that.
pool does that, but again, unfortunately, it's just not scalable. The amount of data, that we end up harnessing at the end of a day is incredible. We're talking billions of rows, billions and billions of shares that we collect every single day that have to be indexed. So need to. So it's. I mean, you're
right. Well, that makes sense because it's all these computations, right? Mm-hmm. It's like every single.
So if you imagine, we have somewhere around 150 to 180,000 mining machines connected to the pool at any point in time. Those are submitting a piece of data every 3 to 5 seconds. That number starts to balloon very, very quickly into what we now effectively have as a big data problem. Like we are a big, like kind of like
a big data company basically.
Yeah. So we've built up incredibly robust data pipelines to ingest all this stuff, analyze it, and then warehouse it. So we're one of the few
companies. And also use it and turn it into Bitcoin blocks, right? It's just,
that's all
an amazing amount of stuff, though.
That all happens in real time, right? That has to be done like immediately in real time. So we basically.
But you're saying you're still holding it.
So we take So the stratum, the stratum collects a share, immediately checks to see if it's a valid block or not, and if it is, then a whole bunch of other stuff starts to occur.
Right.
We
broadcast the block and
immediately submit. Well, we immediately submit it, but then we also do what we call a shotgun. So we shotgun it to a bunch of different nodes all over the world.
Make sure everyone sees it.
Make sure everyone sees it really, really quickly.
Yeah.
We have all of these nodes are running on like high performance servers with NVMe SSDs and all that sort of stuff. But that's like table stakes for Bitcoin mining. What I'm talking about is the share data. Once the share has been validated, it's not a block. It's just a regular share. It's just a proof of work. You can store that. And we do store that as an atomic row in a big, huge table somewhere. Yeah. That ends up, we end up producing an archive. We archive all of that stuff, and then we can produce reports based on it. In the future.
It's crazy. The amount of data. Now that I think about it, it's just got to be insane. The amount of data.
It's 10 on the order of tens of terabytes. It's very, very large. Yeah.
Wow.
And it's fully indexed. That's the thing. Like, it's producing 10 terabytes is like one thing, but having like a way to search that in real time
and quickly. Cool. Yeah. Wow. That's insane. So the other thing that I hear about, and I think you sort of referenced it a little bit regarding latency, is that aren't there some efficiency gains here from Stratum V2 just because it's faster? Yeah, certainly. So since it is a binary protocol, it's less data. It travels through the pipes faster because there's less data, less hot. It's much more efficient in that regard. And then of course the what I mentioned, I think I've called it connection multiplexing. I think they have a different term for it, but basically the idea is that if concurrent like stuff. Yeah, if I get disconnected, I can immediately reconnect. Yeah. Where now there's the protocol for reconnection is not great. There are some improvements that we have made, but it's
not great. Basically, it's kind of hacking some things together,
Yeah.
and not all machines support reconnect. And also, like, the pool failover is also very important. The way that you can fail over to a backup pool is really good, because you can keep a persistent connection open in V2 a lot more easily than you can in V1. Where V1 you kind of have to be having these keep alives and things like that. Where so it's definitely a big improvement to efficiency. But we're talking on the our pool average is like 99.92% across the pool. So we're talking on the order of like single bips here. 0.01% is 1 bip. We're talking maybe on the order of like at the very end.
So
20
even
to
that, you
30
think
bips.
a little like is a selling point, a little underwhelming. Worth it, but not like some radical game changer.
Well, to be fair, the top tier for Foundry's fee for the largest pools is 15 bips. So we're talking like and that's going to be a meaningful portion of revenue for them. And so certainly bips are very important at the mining level, especially at large scale. But it's not like we're going from 95% efficiency or 90% efficiency. We're talking about like razor thin margins, though, or the very razor's edge here.
Yeah. Nick, before we wrap, couple other quick questions.
Okay.
So, first of all, where can people find you and learn about Luxor and stuff?
Yeah, so we're, you can just go to luxor.tech. If you want to, luxor.tech.
Definitely check out hashrateindex.com.
Hashrateindex.com. If you want to learn about ordinals, you can go to ordinalhub.com. You can also find us on Twitter. Twitter is at Luxor Tech Team.
Yep.
We've got at Ordinal Hub. We've got at HashRateIndex. You find me, I'm at #Bender.
Hashbender.
Yep. And yeah, so happy to chat about any of this stuff. Ordinals and
a lot of
mining
exciting stuff with Ordinal Hub and the inscriptions. it's mining has not been this interesting in a while. That was a real game changer.
Yep.
And there's more to come. I think Luxor is you ripped the 4 megger. You've got some bespoke ordinals. You bought Ordinal Hub and the team there. You're going to be a player in this. You are a player. You are the mining pool player.
Yeah,
to
we're
be honest.
here. We're here for it.
Yeah.
We're here for it. We didn't really get it. We don't have time for it to get into like what Ordinal Hub is going to be. Like, it's probably not going to be a marketplace right now, because I don't know what those marketplaces are going to look like. But
yeah, we didn't talk about the marketplace question either. Obviously you have some bespoke ordinal marketplaces have already shown up.
Yep.
Some coming out of the Stacks ecosystem, which makes sense. They had an NFT.
Yep.
Like Gamma and a few others. You have the really cool like Ord Swap and like some of the what's the one that has they pioneered the use of PSBTs.
OpenOrdex. Yeah.
OpenOrdex is
that
really
one's cool.
Really
that one's
cool.
really cool. It's a Windows 95.
You also
theme.
have Magic Eden, the largest NFT marketplaces in the Solana ecosystem, adding ordinal support.
And honestly, it's probably the best one right now. It's
and we
really
have to assume that like OpenSea will get here too.
Yeah.
So that marketplace battle for ordinals is going to get really interesting. You get some highly open source ones like OpenOrdex. You've got some established but sort of Bitcoin adjacent Stacks ecosystem ones. Then you've got the TradFi NFT marketplaces like OpenSea that you have to assume will get involved, or Blur, and that's going to be wild. So what, I don't know, what you're willing to share about Ordinal Hub?
Yeah. So Ordinal Hub right now, we I've already said it, like basically just want to be the hub for ordinals and to go learn 3 verticals: explore, discover, and then market. Market meaning not marketplace, but so explore is like learning about all ordinals, like what's available, what's been minted recently, what is the
data, block exploring type stuff.
Yeah, exactly. Yeah. Maybe Etherscan or mempool for ordinals, but specifically with the ordinals lens.
Yep.
And then of course, and then we have discover, which is learning more about a particular project. So you get to learn about.
So I can say, oh man, I want to learn about the ordinal loops or the Taproot wizards or whatever.
When were they inscribed?
How many are there?
How many are there? Who owns which ones right now? How many transfers have there been? And then market is going to be marketplace data. So it's going to be trying to aggregate up all of the activity that's been occurring, allow you to drill in, understand, okay, this is if I need to sell a rare Pepe or a Bitcoin Punk or a 12-fold or whatever, which market has all the liquidity? Because right now we're seeing very much siloed liquidity across these different markets. And so that will be the place where you can go to learn.
Very interesting. So data, a data aggregator, a discovery platform.
I mean, you go look at hash rate index. We have the playbook.
Yep.
Like we've done this before. It's a lot. I shouldn't say it's not new, but the playbook is we're just running it back again. It's going to work great, and it already has been. Like the data team has been incredible. Huge shout out to the Luxor data team, the Luxor front end team, working over the weekends to get this thing out really quickly. Big release coming maybe today, if not today, a couple days from now.
Cool.
So, which will include all that market data. So it'll be
amazing.
Very
I can't wait
excited
to
for
see
that.
it. Nick Hansen, CEO, founder of Luxor Technology. Great to have you here.
Yeah, appreciate it, man. This has been really good. I know we went a little longer than you usually do, but a lot of things to talk about.
Yeah, a lot going on.
Yep.
Follow Nick and check out his stuff. Thanks again.
Thanks, guys.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Nick Hansen, CEO of Luxor Technologies, and of course, our guest, Beimnet Abebe from Galaxy Trading. And thank you, our listeners, for joining us every week. As always, we'll be back next week, so have a great weekend. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.